So imagine the perfect business model. Strong brand recognition, recurring sales, plenty of location across the world, well located, growth through acquisition because you are in a highly fragmented market, a lot of organic growth potential because there's plenty of things you can do in your business to improve sales and improve sales by the ticker by transaction. Well, you know what? Can you imagine that this business model is a convenience store? Yes. Today, we are looking at Alimentation Couche-Tard. Dividend investors, bonjour, my name is Mike Héroux. I'm the founder of Dividend Stocks, and welcome to part 2 of What's in My Portfolio series. Every 2 weeks, I'm covering a stock telling you the business model, my investment thesis, and what's the role that stock plays in my portfolio. So today we're going to look at Alimentation Couche-Tard. This is a company that I've covered a few times on this channel. Don't forget to like this video, subscribe to the channel if you want to have the feedback on all the other stocks that I have in my portfolio. And let's get started with this one. So Couche-Tard has a 5-star rating at DSR. This is the highest rating that you can have on our system. Dividend safety score of 4. Unfortunately, we're talking about a low yield, high growth stock. So if you're looking to build your retirement plan on Alimentation Couche-Tard dividend payment, you're going to be disappointed. We're not even at 1%. It's usually between 0.75 to 0.85% in terms of yield. But the company increased it quite generously. The problem is, well, if you can tell, it's a problem. The stock price rise is also very fast over the past 10 years. So overall, great investment, but don't expect too much on the yield side. I've told you already, Alimentation Couche-Tard is spread across the world, but mostly in North America. They have a few labs in in Norway, so exposure to the European market, and they also have a few acquisitions that they've made in Asia. So a little bit exposure outside of North America, but the bulk of the business is really in Canada and in the US. In fact, it's the second largest convenience store chains, right behind 7-Eleven. In terms of revenue, you'll see if it goes well in the States, it goes well for Alimentation Couche-Tard. So we're talking about 70% of revenue and profit coming from the States. So if it doesn't go well there, it's game over. However, in terms of product mix, I found it very interesting. There's a lot of volume coming from fuel cell, but the profit is coming from merchandise. And this is one thing that investors were curious about and a bit concerned when Alimentation Couche-Tard wanted to buy Carrefour at the beginning of this year, mostly because Carrefour is a lot of volume, but very low margin and highly perishable items. While when you look at Alimentation Couche-Tard business model, it's all about non-perishable items with high margins. So it's pretty much not the same business model at all. The good news though is while investors are also concerned about Celsius going down as people are moving towards EV, the thing is, we have seen that in 2020 when there was a lockdown, Celsius plummeted, but profit rose. Why? Because the product mix is a lot more about merchandise and other items inside the store than outside. And we're going to see later on in this video what it looks like in terms of growth if we don't have too much regular car selling gasoline. In terms of the Dividend Triangle, you can see that the company is doing very well. You see the revenue dip in 2020. This is explained by the pandemic, but if not, it was on a great trajectory to growth. Same thing for earnings per share. And keep in mind that over the past few years, there was not major acquisition over there. So it was mostly organic growth that we had over there, and from time to time you have a dividend increase, but it's not as stable as a utility, for example. So you have massive dividend increase when there's nothing else happening. So you can tell that management will prioritize acquisition, but if they cannot invest in their business, they will definitely reward investors. Again, the yield is super low. Don't expect it to become a mature business with a 3-4% yield. It's not going to happen anytime soon, but still you're going to have a lot of growth in your portfolio if you add Alimentation Couche-Tard. Now, for the investment thesis, well, the first thing is this business is very resilient. You can see that in terms of profit, in terms of earnings, in terms of shareholders equity or EBITDA, it keeps making money every single year, more and more, regardless if we have an oil crash, regardless if we have a recession, regardless of what's happening. Very resilient business. The other thing that I really like about this business is the fact that they are focusing on merchandise and service revenues. So yes, fuel is important, but it's not the bulk of their business. They focus on what makes a lot of profit and what they have control on. The bad part about fuel is the margin goes up and down all the time. The volume goes up and down all the time, and you have basically no control over that part. Yes, it brings customers in, but the main part here, and we've seen that in the previous chart, 65% of transactions are merchandise only. So it's not only about fuel, it's about a great product mix right there. An obvious reason that I've disclosed several times in the past about Alimentation Couche-Tard, why I like it so much, is the management has built this expertise in growing by acquisition. They know what they're doing. They have been successful several times in the past. And right now, the company shows a very solid balance sheet. So with a robust balance sheet, a lot of cash, and a lot of experience, what's going to happen? Great deals. They are disciplined. They're going to wait for it, but definitely there's more room there to grow if they want to buy other chains, either in North America or outside, to improve geographic diversification. Now, moving forward, what's really exciting is management is not only about thinking, oh, you know what, we're going to buy chains, we're going to update them with our business model, and then we're going to make more money. They also found organic growth sources. One of the first one is that they will invest massively in technology, making transactions seamless, making product availability, visibility even better. So I kind of like where they're going with that. They really want to make sure that they are that store right around the corner where you can make a fast transaction and get what you need within minutes, in, out, and there you go, you're happy. So they use their Norway acquisition as a laboratory because you know that Norway, they have the largest electric vehicle fleet in the world. We're talking about roughly about 14% of all vehicles that are EVs over there. And they thought, you know what, we're going to imagine the future of convenience store where superchargers instead of selling fuel, and how can we make that experience better for the customer, but also more profitable for us. And this is what they have been doing with great success. And now they are ready to move that in North America. They already issued bonds for that. And obviously they will expand their network. They will improve their service. And then in North America, when we're going to be ready to run with EVs, we'll have superchargers pretty much everywhere. They're going to use that like great assets they have, which is perfect location near highways, near central places in urban areas. So whenever you need to charge your car, you'll have a place there, and then you will obviously get in the store and buy a few stuff. So this is almost a bit of magic how they have worked this company, but if you look at a long-term growth for Couche-Tard, over the past 10 years, the stock generated almost 1,000% return. It was mostly acquisition and a little bit of organic growth. And now they're adapting. They're adapting to the reality. They don't want to pay too much for an acquisition. They don't feel it that way, and they see growth opportunities within their networks, within their stores, and what they do, they will invest massively there and then create more organic growth. And there's nothing better than organic growth because you cannot hide behind an acquisition. You cannot hide behind a big deal that make your revenue surge and then you realize some synergies and you're just like, yeah, we're making no more profit. No, you're not making more profit. Your business is making the same profit and then you're buying another business. So yes, it put together, they're making more money, but the business not necessarily growing. With organic growth, you have the real deal because now it's really about what they can do with their own assets and how they can move forward. And I kind of like this thinking of having this mix that is a little bit more balanced, a little bit less risky, I would say, because whenever you make an acquisition, there's integration risk. You have to put on more debts. You don't know if it's going to work in terms of this new market. Maybe it's not going to adapt and accept your business model as it works in North America. So all of those things, you can put them aside and then you can focus on what you know and how to grow faster going from there. Finally, their capital asset allocation is very interesting for an investor because they will invest for the future, they will invest for the growth, but they will also reward you through more dividend and more share repurchase, meaning that the management is quite aware that as a shareholder, what you want is see the stock price goes up and see your dividend goes up, and this is exactly what they want to make it happen. Now, what's the role of Alimentation Couche-Tard in my portfolio? Well, obviously, it's a role of first growth, because this company is on fast track for that, but it's also a defensive play. What I like about this kind of company is it's consumer staple, it's very resilient business as we mentioned in the investment thesis. So if there's a recession, well, people will still need to buy some milk or fuel their car. So they will come around to the convenience store and buy a few things and it will still go well. We've seen that in the past and it's going to keep happening. So great resiliency will bring a defensive aspect to my portfolio, and at the same time, they operate in such highly fragmented market that they have plenty of growth opportunities both organically and from acquisition. So you have this kind of like perfect balance that if the economy slows down, they're going to do okay, and if the economy thrives, they're also going to do great. And this is what I like the most about Alimentation Couche-Tard. Obviously, I don't really look at the yield. I don't mind that much about the dividend increase. I know that from time to time, they're going to skip one because they're going to use their capital to do something else. But as long as I know what they were going to do with it, and as long as I can trust management with what they do, I feel good about it. Now I'm going to end this video with another concern that just happened not too long ago, a few weeks ago. Lots of management sold a lot of shares. So everybody was thinking, oh, okay, so we have like hundreds of millions of dollars going out from management. So it's a sign that there's a problem there and they would just want to cash out and run. Well, I think otherwise. I'm pretty sure that the fact that all management started pretty much around the same time and they have pretty much around the same age, we're talking about between like 65 to 70, there's a lot of estate planning to do at this point. And obviously their exposure to Alimentation Couche-Tard stock is huge. So would it make sense to sell a part of it, cash that profit and diversify their assets at their age? Definitely. So I'm pretty sure it has a lot more to do with this than it has to do about the fact that they're leaving a sinking boat. I don't see Alimentation Couche-Tard going down anytime soon. That's my opinion, not a buy or sell recommendation. But then again, I don't see the link between the both. So sometimes, you're going to buy a stock for one reason and somebody else will sell the stock for another reason. And both investors are right. And that's totally fine. So don't focus on that noise, focus on your investment strategy. And if you have a hard time building your investing strategy or finding how to write down an investment thesis, I have a workbook that I've created completely free. Just click on the link below in the link description. You're going to put up the email. We're going to send it to you. It's like 35 pages. It includes a lot of questions to make you think about your investing process, about the stock you like, the stock you don't like, how you want to build your portfolio. So a lot of questions, a lot of materials. It's all based about what we do at DSR, and it's everything that I use personally to manage my portfolio. So if you want to kind of like have like a small guide, a hiking buddies, this workbook is for you. It's going to help you finding stocks like Alimentation Couche-Tard, but most importantly, it's going to show you how to invest with conviction. So next week, we're going back to regular schedule. So we're going to have actually a video about the most popular stocks at DSR. So you don't want to miss this. We're going to cover the most popular stocks that we have across nearly 3,000 members, seasoned investors that know what they're doing. So we're going to reveal a bit of a secret here. So stay tuned, and until the next video, stay invested.